Well, hello, phenomenal business owners and CEOs and visionaries. This is Cardell Williams once again coming to you with 360 Global Business. And I'm going to share with you about lending. Lending today is really important in business, as you would know. But uh, as before we get started, if you're seeing this on YouTube, I would appreciate, be really grateful for a like, share, subscribe, and if you hit that bell notification so you can see the information that we will be giving out to you as you go forward. Um, but with no further ado, we're going to get started. And how many of y'all business owners, you wanted to get funding, you just didn't understand everything about the lending? I'm going to go over the three C's of lending. The first C is credit. Good personal or business credit is extremely important, and cash flow, right? These are the things our lenders are looking for. So this is your cheat sheet, if you will, to kind of peer in to have a understanding of what they're looking for. And your collateral is everything, right? So they're looking for your collateral. Let's go over the cash flow. Does your business have existing cash flow proven by bank statements? So if you're taking notes, so you can, pause, rewind this, if you will, but you're ask yourself that question, right, about your bank statement. Does your business have over $60,000 annual received in credit card sales? Okay. Does your business have over $150,000 annually going through your bank account? This is what the bankers are looking at. There's a couple of things, there's a couple different ways. Revenue lending. Let's go for revenue lending. Those are short-term loans, 6 to 18 months. Sometimes those are called merchant cash advance, right? Revenue lending. Short-term loans, 6 to 18 months. You can have a loan up to $500,000. Those are pretty easier to get, right? If you have the cash flow. Loan amounts equal 8 to 12% of your annual revenue, with the rates at around 10 to 45%. But those are based on your cash flow. So yes, it's higher, but those are more unconventional ways because a bank, sometimes banks just they have a certain way of lending, and you need money immediately. You need your books, payroll, whatever you're doing for your business, whether it's inventory, expansion, buying a new, truck or building. Cash flow is going to be key. And the good thing is it starts at a 520 credit score to get accepted. So if you have a lower credit score because you've been using a lot of your personal monies and life happens, this is a route for you. And no PD, meaning there's no personal guarantor. You don't need a personal guarantee for this, right? You don't need a cosigner or anything like that, or you don't have to put your own. Um, you don't get a cosigner, which is good. Cash flow, merchant advances, right? So it's another merchant advances, short-term loan, 6 to 18 months. Revolving line of credit is available. The loans amount up to $500,000. The merchant loan amounts equals 1 month's volume. So you look at your volume, it equals that. That's what you'll be getting back. That's what you'll be approved for. So rates are 10 to 45%. Again, 520 credit score accepted. So these are options if you have some challenges right now, and there's no high risk industry. So what does that mean? High risk industries. They consider high risk industries like gambling. If you're into lending yourself, um, certain trucks, like if your name is like trucking. Export is okay. So the verbiage is very important, right? So high risk industries, pretty much, can you pay us back? If you have a high risk of, being closed down or things like that, or you don't know what's going to happen to pay us back, they don't want to do that. And again, no personal guarantee, a guarantor, a guarantee. So you don't need a cosigner for that. Cash flow, private money, need 2 years of positive financials, must show positive sales growth. All right. Even you, as a business owner, you want a customer to have some growth if you're going to be partnering with them. Must have at least 20% collateral, rates of 8%, working capital, credit line. Now, this right here is a 650 score needed to qualify. All right. So, cash flow, SBA, need 2 to 3 years positive financials, completely full documents, Must show positive sales growth as well. Must have 50% collateral, rates of 5 to 8%. 10 to 25 years of credit line is available. Good credit is required. Now, good credit is, again, that's above the 650 fold, right? The 620 fold. So that's required. And collateral, let's talk about collateral. Acceptable collateral, accounts receivables. I like the understanding and the inside of this because this is really going to help you understand accounts receivables, stocks, bonds, and other securities, cash on hand. Other collateral is inventory, purchase orders, um, acceptable collateral, equipment, 401k. All right, so some real estate, a floor plan, book of business. So you see how you're probably sitting on monies that can help you expand and not even realize it. Accounts receivable factoring up to 80% receivables forwarded 1 year, and business is required, must be receivables from another business, rates of 1.25 to 5%. Next time, we're going to go over the security based lines of credit. But this is something for you to understand, right? To give you some insight, if you will. Because what I know for sure is that if you don't understand this, this could hold you back. Again, this is Cardell Williams, 360 Global Business, wishing you a phenomenal, prosperous day, year, quarter. And if we can assist you at all, please give our office a call, respond back to this, or in the chat below, in the comment section, or just go ahead and just give us a call directly at 305 317 2363. That's 305 317 2363. Enjoy the day on purpose, increase, and prosperity to you. Have a good day.